Welcome to This Week in South Carolina. I'm Gavin Jackson. The 39th Annual Economic Outlook was recently unveiled by the Darla School of Business at the University of South Carolina. The report looks at what we can expect financially as a state in 2020. This is the 10th year the state has seen significant growth financially, though researchers expect it to slow down somewhat in the upcoming year. Industry continued to hum along at a strong pace in South Carolina in 2019, with a major announcement by Lockheed Martin to start producing F-16s in the upstate, growing the bustling aerospace sector, while another automotive cluster continues to grow in the Lowcountry. All of those companies, as well as current, new, and expanding ones, fueled an all-time record unemployment in the state, driving up wages for workers and giving them leverage in the job market, while at the same time fueling labor shortage in the state and elsewhere. Nationwide unemployment is at a 50-year low, and inflation remains at bay, which has helped mitigate ramifications from tariffs and the ongoing trade war with China, South Carolina's biggest trading partner. There's little chance of a recession in 2020, and growth is expected to slow slightly in South Carolina, while the labor market continues to be tight. Joining us today to discuss the economic outlook is Dr. Joseph von Nessen, a research economist at the Darla School of Business. Together with the school's research director, Dr. Doug Woodward, he authors the annual Economic Outlook report. Joey, thanks for being here.
Thank you for having me.
So, a lot going on. Things are still chugging along, it sounds like. What did we see in 2019? And we'll get to what's going on in 2020. But how was our 2019 here in South Carolina?
Well, South Carolina has been very resilient. That's the word I think is most appropriate in 2019. Resilient to the trade shocks that we have seen and to the ongoing economic uncertainties due to a reduction in overall global demand. Most industry sectors have seen consistent positive growth throughout the year. We've seen job gains in every county in South Carolina, all 46 counties over the last year. And we have a labor market that is the best in a generation. Our current unemployment rate is 2.6% in South Carolina, which is the lowest that it's ever been. And not just the lowest in this expansion, but the lowest since we've been keeping records, which is, again, great news if you are a worker. So very resilient this year. But having said that, we haven't escaped the trade war unscathed. We have seen some effects in terms of overall growth. It has softened a bit. I like to use the word softened. I think that's most appropriate. And we expect that softening or that slowing economic growth, that trend that we've seen, to persist into 2020.
But you can soften and not have an issue of, I mean, you're still growing, you're just not growing as fast. You're
Exactly.
still growing, right? So that's the takeaway, essentially.
Yes, because all major sectors in South Carolina have been growing, but again, the takeaway, yes, you're right, that we're slowing down, but that's not necessarily a bad thing, especially considering that we have an emerging labor shortage in South Carolina because the labor market has been doing so well.
So talk about that, because I think we were kind of still dealing with the labor shortage last year too, and it's just become maybe more of an issue since we have such low unemployment. Good for employees, but bad for industry, apparently.
Exactly. Employers across the board in most industries, really all industries, are struggling to find the workers that they need, both in terms of the hard skills, the technical skills, as well as the various soft skills, things like showing up for work on time, passing a drug test, those types of skills. So in both cases, employers are really struggling right now. Again, it's a great time to be a worker, but this is something that South Carolina is going to have to address because it's going to be a bottleneck on growth next year. Even if we see a resolution to a lot of these trade disputes and manufacturing sees a significant uptick in demand in 2020 in South Carolina, they're going to be asking that question: where are we going to get these workers?
And how do we address that? I know we've been seeing a lot of big pushes at the state level, at the legislature, dealing with education reforms, trying to get our workforce to have, we're pretty much on the bottom when it comes to education in South Carolina nationwide. That's been an issue. I know the governor and lawmakers have been trying to put more money towards retaining teachers and, making classrooms better and seeing improvements in the metrics. I'm just wondering, is education one aspect of that, or do we have to start attracting talent from other states, or how do we fix the labor shortage problem as we can?
Well, certainly both of those factors are important. I would say we do need to do a better job of attracting talent from out of state. We need to do a better job of keeping talent in South Carolina, so keeping our graduates here. And also we need to do more of what we're already doing, which is meeting the employer demands by training our workers in South Carolina. So programs like Apprenticeship Carolina and Ready SC and others are nationally recognized and do a great job of meeting employer demands. So I think scaling those up is certainly appropriate, but there's no one solution. It's multi-pronged.
So it's not just a South Carolina problem. This isn't affecting, possible job, potential industry coming to South Carolina, seeing that there's a tight labor market, because that's pretty much everywhere. Do we see any indication that that is affecting anyone being recruited to South Carolina in any way?
Well, it's certainly affecting the U.S. as a whole. You're right. It's not just a South Carolina phenomenon, although we have an unemployment rate that's close to a full percentage point lower than the national average. And in some metropolitan regions, it's below 2% right now. So South Carolina is experiencing this more than the national average, but it's by no means unique to South Carolina.
Can we keep going lower, or have we reached the bottom?
We'll see. Yeah, there's not much room for the unemployment rate to go down, so we'll see what happens this year. I think that now that growth is likely to slow in 2020, South Carolina is really better poised to weather that slowdown, because again, we don't have the workers. Employers are struggling to find the workforce that they need. So in a very real sense, we're really more to a long-run equilibrium, for lack of a better term.
And so with this tight labor market, though, I'm guessing wages are also going up for these employees as they try to keep these guys keep them in jobs, essentially?
Yes, and that's another benefit that we've seen in this expansion, and one of the unique benefits from having such a lengthy expansion. We're now in the 11th year, believe it or not, going back to the summer of 2009, and there are several benefits that are unique to a lengthy expansion, one of which is that we see wage gains, which we certainly have over the last year in South Carolina, but more importantly, we're seeing wage gains across all occupation sectors, including those that typically fall on the low end of the pay scale. And in the last year, those workers on the lower end of the pay scale have actually seen wage growth higher than the overall average. They've benefited the most over the last year. And that typically only happens after you are in an expansion for a period of time. Another advantage is that we're seeing growth in more rural areas of South Carolina. I mentioned before, we've seen positive growth across all 46 counties. Again, that's another benefit that's relatively unique to an expansion that is fairly uniquely long.
So if I'm an employee somewhere and it's a pretty competitive field, how do I use these numbers, this current economic landscape, to my advantage? Or if I'm an employee who's maybe not making that much money, how can I look at the labor market right now and say, hey, I could be making more money? What should people like that be doing when they look at this economic outlook right now?
Well, I think they need to recognize that this is the best job market in a generation, and most industry sectors have been seeing growth. So in high demand fields, they need to identify what areas interest them and to really see what skills are necessary and acquire those skills, because employers are struggling to find workers. So if they can meet a demand, then they're very likely to be able to find a good job right now.
And you talked about in-demand jobs. What are the in-demand sectors in South Carolina when it comes to industry and maybe jobs with the best pay or biggest turnover, most likely to attract more people to?
Well, manufacturing is still the major leader in terms of driving growth in South Carolina. It has been throughout this expansion period. So that, I'd say, is the major industry as a whole. At the Moore School, we typically see data analytics as a very strong field right now, especially in the era of big data. So think about Google and Facebook and all the data that they're capturing. Well, they need data scientists and economists and statisticians and others in various business fields to analyze that data and make and advise CEOs and other managers in different businesses. So if you have those skills to be able to statistically analyze data and then provide strategic guidance for businesses, that's a very hot field right now, and it's likely to increase going forward as big data basically becomes even more available.
Which again fuels possibly the outflow of the brain trust of South Carolina if there's more enticing offers elsewhere. But again, still something that's in demand also in South Carolina, is that
absolutely
big data field.
And that's another thing we need to be working on is retaining that talent, because we have a lot of good talent in South Carolina and we want to be able to keep them here. That's going to be very important for our growth over the next decade.
And when we look at that growth, manufacturing's obviously been a huge push. Advanced manufacturing in South Carolina has just been explosive. Are we in need of diversifying that right now, or how do we look going forward? With possible recession off in the distance, obviously not next year, but if there is one, how that might affect manufacturing, because it seems to get a little bit hit a little bit harder, especially when you look at how it's tied to international economies too.
Well, I think if we look ahead and we think about South Carolina over the next decade, manufacturing is certainly going to continue to play a role. We are very much set up as a manufacturing state, as an export-oriented manufacturing state, and we're going to continue to be competitive because of the Port of Charleston, because of our relatively unique location. We're a jumping off point for distribution for manufactured goods throughout the United States as well. So we have a lot going for us for manufacturing. But as we look ahead, we can't put all our eggs in one basket. We do have to look at other industry sectors, and in manufacturing in particular, as an example of how to diversify and look forward, we have to consider that industry itself is going to be evolving. So think about all of the major auto manufacturers that are going to be debuting electric vehicles over the next, let's say, 5 years or so, and they're not going to have engines. They're going to be on battery power. So what are we doing in order to be thinking about manufacturing and the suppliers as electronic vehicle components and supplying those components for vehicles? How is that going to change? So think about battery technology, think about energy costs becoming more pressing. So we have to be forward thinking, because the success that we've seen over the last decade is not going to necessarily replicate itself unless we are proactive.
So when we're talking about Volvo, Mercedes, BMW in South Carolina, those looking for some evolving industries or suppliers, possibly developing a cluster of more of those suppliers in South Carolina, perhaps?
Exactly. And all of those companies that you just mentioned are looking at electric vehicles. So how do we look at the automotive supply chain in South Carolina, and how do we help it evolve towards a supply chain that can support electric vehicles in a way that we're not doing right now?
And Joy, just kind of looking back at the economic outlook, what other fundamentals do you guys look at when we talk about how the economy is doing, housing, or do you look in education and graduation rates and things like that fueling the workforce, or what else do you guys look at overall?
Well, it's also important to look at population trends in general. In South Carolina, population trends are typically on our side in the sense that we are a growing state. We are very attractive to retirees that are looking to relocate. We have a fairly low cost of living, a lot of natural amenities, a good climate here. So we're benefiting from overall population gains, but those are population gains that are not going to be necessarily result in a workforce, because they aren't younger people. So that's something that we have to be on the lookout for. So I'd say that's a long run trend we need to be specifically looking at and being more proactive about attracting younger talent. That's important too.
But housing's also relatively strong in South Carolina at this point?
Housing is good, yeah. If we look at other industries, housing is doing well. Manufacturing, we said, is doing well. Most of the professional sectors are doing well. The biggest leader in 2019 was actually the tourism sector in terms of growth patterns, and we see that along the coastal area of South Carolina, Myrtle Beach and Hilton Head in particular. And that's because consumer spending has been very strong. So we talked about a strong labor market earlier, which is putting upward pressure on wages, and that is in turn driving consumer spending, which in South Carolina translates into more tourist activity.
So you guys had your Economic Outlook conference where you kind of discussed the findings. You had several other economists there with you discussing these, and someone, at one point there was a Q&A and someone stood up and asked about tariffs, and they said, I'm surprised that American businesses were paying for these tariffs. Is there some confusion about how tariffs are really working? I mean, Americans are paying for tariffs because of the result of this trade war. So, I'm just wondering why some people think that's surprising. Are they just maybe confused about how these work because we haven't really been in a trade war like this in a while?
That's probably true. I think so. Because a tariff, at the end of the day, is just a tax, and that's an easy way to think about it. It's a tax on consumers. It's a tax on businesses, and that's what we have seen throughout the last couple of years. There are basically two major effects of tariffs. One is are the pricing changes that we think about in the form of a tax. So if a business faces a tariff, that means that they're paying more for materials that they're putting into goods that they're producing. So you can think about components to a vehicle that are costing more, or we can look at tariffs from the perspective of retaliatory tariffs, such as what China has done, which basically tax on an increase or tax on an additional cost to the price of a vehicle once it's shipped over and sold in China. So in both cases, those are pricing effects. The other impact, however, that we don't talk about quite as often is the psychological effects. So if you're a manufacturer in South Carolina and you saw a tariff implemented in 2018, even if it was temporary, let's say it went back down in 2019, you're still a little concerned, and you might be more wary in this economic environment of, well, maybe that's going to happen again in 2020. Maybe I want to hold off a little bit and not invest until I'm more certain about the economic conditions and the business landscape. So you've got pricing effects and psychological effects, both of which have manifested themselves in the U.S. and in South Carolina.
How have we seen that in South Carolina? You're saying it's manifested a little bit here. What do we see in terms of, we did see, I don't know if it was directly tied to, but I remember BMW talking about freezing their pensions and changing up their pension situation. I'm just wondering how we see it maybe manifest in other ways in South Carolina.
Well, every company is different, so I can't comment on that point specifically, but we've definitely seen it when we look at the export data. So exports that are going out of Charleston, we saw that the growth rate go down significantly in 2018, specifically in response to a retaliatory tariff placed by China, which encompassed a 40% tariff on U.S. autos that were sold in China. That only persisted for about 6 months, and then it was reduced, but we saw a major hit in the growth of exports, which has been recovering this year. So that's one element we can see in the export data. And then secondly, if we look more specifically at employment data, we can see it in terms of a slowdown in contingent labor in the manufacturing sector. So manufacturers in general tend to hire employees both directly and through contingent labor because they need flexibility to be able to scale up and down over time because their demand fluctuates. So that's pretty normal business patterns for them in terms of how they're hiring. But at the same time, because of that, in 2019, we've seen the contingent labor force or the contingent employment base drop off significantly. A lot of that resulted directly from the manufacturers scaling back, trying to really wait out a lot of these trade negotiations. So we've seen it in the employment data. We've also seen it in the export data.
But the spending data, we still seem pretty confident in our spending. We're not, these consumers maybe don't feel the pinch yet, or we haven't seen it trickle through yet, whereas businesses might be absorbing these costs. Have they been passing them down to the consumers at that point?
They have to some degree, yes. Inflation has remained low, so we haven't seen a major hit there. And it's largely been isolated to the manufacturing sector. That's another element of this. If you look at the slowdown, it's disproportionately affected manufacturing. The service sector continues to do well across most professional sectors, including housing, which we talked about before as well. And so as long as consumer spending remains strong, which is directly linked to a strong jobs market, we anticipate continued growth in 2020.
And we're taping this on December 11th. December 15th, there was supposed to be a new round of tariffs coming in. Really kind of, these were delayed because they were targeting things like electronics and toys that would have affected the Christmas shopping season. I'm wondering, when we start getting to things like that, I mean, we'll probably start seeing more of an impact on these tariffs and people maybe understanding more what they really mean to them. But at the same time, we're not entirely sure if they're going to get implemented. Things can change because they have in the past. So I'm just wondering, when you start getting on these consumer goods, more or less when we're talking about manufacturing, does that change maybe economic outlooks and consumer spending in 2020 and beyond?
It certainly can. I think it's basically a wait and see approach at this point. And like I said, the labor market has been so strong recently. Consumer spending has been steady. I think that any imposition of the tariffs like what you're talking about, the U.S. economy can handle some of that, although that's certainly going to slow growth. So we'll see. Every tariff is going to be different, of course, but the consumer market and the business markets are affected slightly differently.
But when we're talking about these tariffs too, I mean, I know there's uncertainty, and I know businesses hate uncertainty, but it seems like they've been faring pretty well with that kind of happening here and there and not knowing if it's going to affect their industry or not. Is that surprising to you? I mean, we've also seen pretty record numbers with the stock market concerning a lot of this volatility, if you want to call it that.
Well, it's very industry specific. So if we look at the service sector, we haven't seen much of a change at all. It continues to do very well, again, driven by consumer spending. But manufacturing and what I would call manufacturing adjacent industries like trucking, logistics, those have seen a much bigger slowdown. So I think it's too strong of an analogy to say it's a tale of two economies, but it's certainly true that if you look at manufacturing and the broader professional services sector, they look very different right now across the U.S.
And kind of sticking with trade really quick, want to talk about the potential U.S.-Mexico-Canada agreement. That sounds like it's gaining steam in the House of Representatives, could make it to the president's desk at some point soon. I'm wondering, when we look at that, it sounds like it's pretty similar to NAFTA. It's about 90% the same as NAFTA in some respects. Does that affect South Carolina? Should that get implemented in the coming year, or are we pretty much tied to China and Germany when it comes to more of this international trade?
Well, China and Germany are certainly our biggest trading partners in South Carolina, but USMCA has the potential to generate a lot of benefit for the U.S. and for South Carolina. The biggest benefit, I would say, is just the fact that it helps to restore economic certainty. because, again, getting back to this idea that businesses don't like to invest, they don't like to make decisions when they don't have a good feel for what the business landscape looks like. And the biggest concern had been that perhaps the U.S. would withdraw from NAFTA if we didn't see any type of trade deal made. So it looks more likely now that we're going to see that happen in 2020. That helps restore confidence. I think that's going to be the biggest positive. But we also see some more specific benefits too, in terms of more local content requirements for manufacturers in order to be able to escape some of these tariffs. So that's going to incentivize them to do more production in the United States and in Mexico, the United States, and in Canada. And then also looking at these wage requirements. So there's a $16 minimum wage, effectively a minimum wage attached to USMCA as well, that says that there has to be a 30% of the production of a vehicle, for example, would have to be made by workers earning at least $16 an hour. And again, that's going to incentivize manufacturers to keep production in the United States, which could in turn benefit South Carolina as well.
And when we talk about minimum wage, I know that's been a hot topic on the 2020 campaign trail. I don't know if you necessarily analyze those trends or those proposals and how they would affect South Carolina, but is there a way and how that might affect South Carolina if we had a $15 minimum wage, or if we, for example, got rid of student loan debt, which is $1.6 trillion, how those things could affect South Carolinians? Do you analyze those?
Well, every proposal is different, of course, or every state is different, every region, so we can't look at it. We can't make too many general conclusions, but I'd say with respect to minimum wage, if you look in South Carolina, because our cost of living is so much lower here, and wages typically reflect that a national minimum wage that's going to significantly change the current minimum wage in South Carolina up from $7.25 an hour up to, it would be 15. That would be a significant change relative to what you might see in California or Washington or other areas where that going to $15 an hour wouldn't be as much of a disturbance to the labor market there. So South Carolina, I think, would be affected more in terms of the impacts on businesses in terms of their overall cost structure. So for the minimum wage, we'd see a bigger effect here, bigger negative effect than we would perhaps elsewhere.
And then just kind of talking about the Fed, I know they're meeting right now while we're taping this week, and I'm wondering what we saw with the Fed's actions this year. They made a rate cut for the first time in, I think, a decade. I'm just wondering how you guys see them acting and what role they play in, and I guess keeping this economy going at the pace it's going right now.
Well, right now it looks like they're going to hold off on any further rate adjustments, for the time being. So we'll see how that evolves into 2020. They recognize that we're facing a lot of economic uncertainty as well. But the thing that the Federal Reserve is really looking at, in addition to that, is this link between growth and inflation, because we really haven't seen that. And normally in an economic expansion, you would expect to see a strong labor market that would evolve, that would strengthen over time, that would lead to more wage increases as employers compete for workers, and those higher wages then get spent in the local economy, putting upward pressure on prices, which is what we define as inflation. And that last piece, that relationship has changed considerably because we've had very low inflation despite the fact that we've had strong wage growth. And so economists are really scratching their heads. They don't know exactly why that's the case. One reason is certainly because we're facing more globalization in this expansion, and that leads to more global competition, which keeps prices down. So that's been a positive. That's part of the story. Part of the story is also that central banks around the world have been more proactive in trying to limit inflation as well. But there's no single answer, and it's something that they're continuing to evaluate. And Jay Powell, the chair of the Federal Reserve, is talking very openly about that. That's something they're monitoring closely, because we don't know exactly why that relationship has changed in this expansion.
So a lot to look at there, especially with the Fed. And then I know you recently had a meeting with the South Carolina Council on Competitiveness. Can you elaborate on that meeting in any respect, or at least what that council does and maybe what role you play when they call upon you?
Well, they are typically looking at, I think you're referring to the recruitment of businesses to South Carolina and what that looks like. So they're constantly evaluating opportunities, looking at the clusters that we have in South Carolina, how a specific business could contribute to that cluster, could enhance it, and so it basically is looked at on a case-by-case basis, and they're just trying to evaluate what the costs and benefits are with respect to incentives, with respect to potential gains in terms of jobs and overall economic activity. And again, it's on a case-by-case basis, but that's a proactive approach that they're taking to try and recruit business to South Carolina to keep our economy strong and keep us moving forward.
So you're not going to tell us who it is?
I can't do that, no, unfortunately.
But Joey, just kind of about a minute left. I know we briefly touched on this a moment ago. We're talking about like kind of looking at what the 2020s hold for South Carolina. How do you project that, and where do you see us going in the next 10 years?
So for South Carolina in 2020, I would say that we're in for slower growth. So positive growth, we're not expecting a recession next year, but I think when we look back and compare 2020 to 2019, we'll say 2020 was a good year, but it wasn't quite as good as 2019. So that's what we mean by slower growth. Over the next 10 years, we anticipate that manufacturing will continue to drive growth in South Carolina. We continue to be a manufacturing-based state, and we have a lot of competitive advantages, including the port, including a low cost of living, positive business climate. And despite the fact that we have a labor shortage, we do a very good job of matching employers with workers, and we have very good workforce programs to do that. So that's going to continue going forward. The key is going to be whether we adapt to the evolving manufacturing landscape, getting back to moving towards electric vehicles, getting towards energy costs becoming more important, and attracting skilled labor and keeping it here, because that's going to be a major competitive advantage that we will have and every region needs.
A lot to look forward to in the next year and 10 years from here. Thank you to Dr. Joey Von Nessen of the Darla School of Business for this economic update. And thank you for joining us. Also, check out the South Carolina Lead. It's a political podcast that you can find on your podcast app on any mobile device. Each week I recap the weekly political news with reporters who cover it. From the Kennedy Greenhouse Studio on the campus of the University of South Carolina, I'm Gavin Jackson. And from all of us here at ETV, happy holidays.